In the upcoming week, significant attention will be on U.S. inflation data and the perspectives shared by various Federal Reserve officials. These insights will significantly shape investors' perceptions regarding the future trajectory of interest rates. Against the backdrop of persistent concerns over inflation, economic forecasts, and volatile oil prices, retailers are set to disclose their earnings. Here's an overview to prepare you for the week ahead. 1. U.S. inflation data. The eagerly anticipated U.S. consumer price data for October, due on Tuesday, will provide an update on the Fed's progress in combating last year's historically high inflation rates. Expectations suggest a 0.1% monthly increase after September's unexpected 0.4% surge, primarily driven by rising rental costs. However, signs of moderation in underlying inflation pressures were also evident. A more pronounced deceleration in inflation could amplify discussions around the peak rate, especially following October's labor market report indicating eased conditions. Additionally, the U.S. will release producer price data and October's retail sales numbers, which are anticipated to dip into negative territory after consistent monthly gains. The week also includes releases on industrial production, housing starts, and initial jobless claims. 2. Fed speakers. Throughout the week, several Fed officials, including New York Fed President John Williams, Chicago Fed President Austin Goolsbee, and Governors Philip Jefferson and Michael Barr, will share their insights. This occurs as policymakers deliberate any potential tightening measures ahead of their upcoming meeting on December 12-13. In a recent statement, Fed Chair Jerome Powell emphasized the ongoing uncertainty regarding interest rates, highlighting the priority to combat inflation without overly tightening policy. His sentiments were echoed by colleagues like San Francisco Fed President Mary Daly. Investors are closely monitoring benchmark Treasury yields for indications of a rate peak and potential rate cuts. 3. Retail earnings. As the third quarter earnings season winds down, major retailers are expected to report this week, offering insights into consumer spending trends. Home Depot, Target, Walmart, and Macy's are among those reporting, with a particular focus on Target's challenges with increased costs and Walmart's robust performance. Other retailers, including TJX Companies, Gap, and China's Alibaba, are also scheduled to report. 4. U.S. government shutdown risk. There's a looming risk of a federal government shutdown if lawmakers in Washington fail to pass a measure for temporary funding before Friday. Divisions within the Republican Party over spending cuts and policy riders have persisted, creating uncertainty about bipartisan support. Speaker Mike Johnson presented a Republican stopgap spending measure aimed at preventing a partial shutdown. Yet it faced opposition from both parties. Another round of debates could reignite concerns about governance in the world's largest economy. 5. Oil price volatility. On Friday, oil prices increased by about 2% following Iraq's endorsement of OPEC+ oil cuts ahead of an impending meeting in 2 weeks. Additionally, some speculators covered significant short positions in anticipation of weekend uncertainties. Nonetheless, prices closed the week with a 4% loss, marking the third consecutive weekly decline. Concerns about the global demand outlook overshadowed fears of potential production disruptions related to the Middle East conflict, especially amidst weak economic data from China, the US, and the UK last week. Energy traders are eagerly anticipating the upcoming meeting between the Organization of the Petroleum Exporting Countries OPEC and allies, including Russia, on November 26. Analysts speculate that OPEC+ might consider further supply cuts if prices continue to decline.